Good morning, everybody. Can we please get a audio check in the chat just to confirm that we are good? Give everybody time to get on here. Unfortunately, I had to delete that link that I shared earlier this morning. Let me just see if I can get that link. If I can quickly get that link shared so we can just get everybody to come into the stream. Make sure that everybody's got the correct link to it. And 1 sec to share that link. Please just confirm in the chat if we have audio here. Audio is good. All right. Let me share that link quickly and then we can look at the charts. All right. Got the link sent out. So everybody should hopefully join in pretty soon. We're first going to take a look at the calendar. I'm going to pop that up the stream real quick. There's your calendar. Have a quick look at that. All right. So, looking at the calendar over here, we have, let's give this a refresh. Let's get it up to update it. We're looking at 10 a.m. Fed Chair. Fed Chair Powell testifies. We're looking at that one. And we have a 1 p.m. bond auctions that we're looking at those for today. All right. So let's start with the dollar index. Let's jump into a daily. I am still looking for the futures markets to rally. Seasonal tendencies are still bullish for this week of July. Let me just quickly open those up and just have a look. Yeah. For this week, we should still see bullish price action. And we should see bullish price action next week as well for futures. And then we could see a possible consolidation with a slightly downward retracement for that last week of July. That would be on your 5, 15, and 24-year periods, respectively. If you look at the seasonal tendencies chart from More Research Center. That's where you guys can go and get those on More Research Center. If you just Google it, I'll open a tab up quickly. I'll show you guys those where you can get those. If I look at the dollar index for July, it's for the second week of July, we have slightly downward consolidation on the 5-year, and then on the 15 and 35, we have a bearish price run on those. And then for the third and the fourth week of July, we continue with that downward move on the 15 as well as the 35-year. Although the 5-year does go into a sideways consolidation for those 2 last weeks of the month. Whereas your 15 and 35, those still have a downward move with a retracement on the third week of July of this month. So I have my eyes on those. Okay, let's just quickly see if I can. Let me just see if I can pull those up. So I can show those to you guys. Here we go. If I can bring this over here. Okay. All of you should be seeing the screen. You type in more research, seasonal tendency, and it should be this link over here, www.mrci.com. You can open that one up. And you just have to log in, create an account, and it's worth it to just get the subscription and get your seasonal tendencies. Once you've got them, you can save them, and then you don't have to renew the subscription, obviously. So it's gonna cost you $50 to get them, and then you've got them for a life. There's no need to keep paying that subscription on a monthly basis. So that's where you guys can go and get those. It's good to have them on hand. They give you an extra confirmation, extra confluence as to what you're looking for. So looking at the dollar, and I'm working off of this analysis, and I did this yesterday. I having the idea in mind that I want to see bearish price action on the dollar index. For a weekly, we have this inversion, extend that through. On a monthly, we still have that monthly order block. I still keep that on the chart. Weekly, I've got that inversion that I'm looking for. I think this one is also another one. Weekly inversion. Yeah, that's another one right there. This candle and that candle. Pull that through down to a daily. I did note this equal high up here. Daily wick consequent encroachment. And then we had a 4-hour old low. That was down there. We'll look at that now. For today, let's pull this stuff over. I like this wick. I'm going to take note of that wick. I like that wick. I'm going to take note of that wick. So, by the way, today I'm doing this analysis live with all of you. Just make sure I got the consequent encroachment on this one, because that is a sensitive label on this one. We traded up into that consequent encroachment yesterday. So take note of that. I like this fair value gap here. I like this label as well. So I'm going to take note of that. These rectangles are, well, actually, I'm not going to take note of that one because I've already got this weekly. I'm just going to extend this weekly inversion through because we are trading inside of that inversion and it's overlapping with this one. So I'm not going to draw that one. So it's just going to get the charts all cluttered and messy, and I just don't want to do that. Let me just go down and clean up these 15-minute labels. We still have not traded these labels, by the way. This 1 hour inversion that basically just held price yesterday, send it up higher. I was looking for I was actually looking to see if price by noting this 1 hour inversion. I was looking to see if price was going to trade below this and make it a inversion. So this would be a fair value gap. But I was looking to see if we could trade below that and then trade back into that and have price then trade down lower, which obviously it was not able to stay below that inversion to send price down lower through this one into this 15-minute equal low, which if we just take a look, we traded below that. It should have retested it, send it down lower through this 1 hour inversion, fair value gap, which would then become a inversion and then down into these equal lows. That was what I was looking at, which obviously that did not come to fruition. And then I was looking at last week's low and the 4 hour equal lows that was sitting over here. So those would be, so that's a old low on the 4 hour chart over there. And then I was looking at these equal lows down here, basically. I was looking at that level to get traded into. Let's just pull this stuff over. There's that weekly inversion, that small one. See how we are above the consequent encroachment? We tapped it and we have not traded below this yet. Let's just get this upper one. Extend that through as well. I'm pulling these over a bit too much. Should be fine there. Should be okay. So let's get rid of these 1 hour inversions. I'm not going to look at those. I'm going to look at a different level. Let's go back up to that 4 hour chart. So we have this daily wick consequent encroachment. We traded into this. We cleared this high. We cleared this high. It's inside of this 4 hour order block. So if I'm looking for shorts, which we are looking for shorts, but we'll make a final decision once we look at the NASDAQ. We'll make a final decision on that, on exactly what we want to look at. Once we get to that chart, I'll look at that then. But if I want to be short, then we have the base because we traded this daily week consequent encroachment. We have a 4 hour order block. We traded below that. We traded into that there. We traded into it here, here. And we also have the high of this inversion, which is this upper line here. We're sitting right on that line and we are rejecting it there and we're trading lower. What I would want to see is price go below the consequent encroachment of that weekly inversion. And then I would look for a fair value gap that I could then use as a inversion. We do have this fair value gap, although I'm not going to note that because we have this weekly inversion here. So we're just going to look at the weekly inversion. Otherwise it's just going to get a lot messier if we add too many labels on this chart. So on the 1 hour chart, we do have this string of up candles here. We also have this up candle. We have this one trading into this one. So that's like, okay, we traded into that order block. We traded into it again. Notice the highs, lower highs each time. Failure to trade above these highs. Take note of those things. So we are clearly bearish. So I would look at these equal lows over here to get traded into. So let's just take this, put it right on those lows. One hour equal lows. Let's just make it blue. Or let's make it a purple. That should be fine. And then I do want to take note of this order block. and we can just leave that in red. And then we still have these relevant targets below us. If price really wants to get animated and start trading out lower, then we still have those below us. Down to a 15. Basically, we have the same idea where we have that order block. We trade it into it there, trade it lower, this one, that one, trade it into it again. Look at the failure to go above this high, failure to go above that high. So we are clearly in a bearish market and we are breaking lows. 15 minutes, see that? Those 1 hour equal lows, they could also be classified as 15-minute relative equal lows in this area. We'll just keep it like it is. So that's what I'm looking at over here are these relative equal lows. Now, a lot of times I like to add a filter, which a filter would usually be I look for some sort of a fair value gap to become inverted, like I just talked about, or I look for something that is a inversion and I look to see if price is willing to get below that. And then I look to see if we can stay below that and continue rallying down lower. So in this example, I have one here and I'm going to change the color. Don't worry about that. We'll make these ones orange so they can stand out. I'm looking at that one and I like this one. I'm just choosing the obvious levels. If we can get below this and stay below this, retest that and go lower, that is a clear sign that we are bearish. I hope you guys brought your notepads along today because I am absolutely dropping gems. And you should be taking note of these things because are these are things that would come up in your mind as a new trader, and you're going to ask yourself, but how do I know for sure that even though I have the structure that it's confirming that it's bearish, I want to have one more confirmation, and that confirmation could be that you're looking for a fair value gap to get inverted and for price to stay below that and then trade down lower. So that's that for the dollar index. That's the levels that I'm looking for on that one. Let's go over to the Nasdaq. Let me just see if I can get that moving. Okay, let me quickly change that. Okay, there we go. Just make sure that it did. Okay, there we go. It seems like we're good. Perfect. So let's take a look at the NAS or the US 100. All right. So you're looking at a daily chart of the US 100. Not much to see. We are bullish. I'm expecting bullish price action here. Again, I did do an analysis yesterday, which I'm just likely going to work off of that and take it from there. So, what I'm looking at over here is this old high. It's going to be a level that I will note. Just noting at yesterday's high. Nothing here in here that is a fair value gap. We do have an I fair value gap, which you take this wick, half of this tail, and you would extend those out, and then you would get a fair value gap. Not going to look at those now. We've traded away from that area. Not something that I would look at. Moving down into a, let's just pull this back. 4 hour, we had a beautiful retracement yesterday. Back down into this order block. I did note these equal lows here. Something to watch, something to keep your eyes open for. Since we traded into this, I would consider this the order block because this candle here is inside of this body. So I would classify this candle as the order block. So use that. And then I'm just going to make that a blue line. Probably pull that through a little bit. Not much to see here. We have yesterday's high, really close to that. And then we do have a, which was a 4 hour fair value gap. 4 hour fair value gap. That now became a 4 hour inversion. Not in an inversion, a balanced price range. Because we have that gap and we have this gap over here. So that's a balanced price range. We do have an order block inside that. Not going to note that it's overlapping with this balanced price range. Price area related away from that. Going to go down into lower time frames to find a level there that I want to take a note of. All right. Go down into a 1 hour. We still have yesterday's high. Really messy price action, really stepping up really slowly, not clean at all. You can see that we are lackluster because of the fact that we don't really have any high impact news. There's not much to see. So we do have this. This would classify as an order block. This massive down candle. If we trade through that, which we did over here, this is valid. This becomes an order block. So we'll note this as an order block. We had equal highs. We cleared those yesterday, and that was the premise that sent price down lower into retracements. Let me just get rid of those. Not going to look at those now. We got this order block here. Vague, big. But we could use this as a catalyst if price comes back into this. And we have, for instance, a breaker block or a fair value gap on a lower time frame that we use as an entry pattern, then that would be the trigger on the higher time frame PD array. I'm going to keep this one in orange, and I'll note this as a 1 hour fair value gap. So this is a nice level. I like to see this level. We do have this wick. Let's take note of the consequent encroachment. Eyeball it. Consequent encroachment of that wick. And let's make it a Just go for green and let's work into a 15. So these are the levels that I'm going to look at primarily. Still with that idea that I want to be bullish. So I want to see price stay above this 1 hour order block. We still have this 15-minute fair value gap over here, overlapping with the 1 hour fair value gap. Let me just extend that so it's cleaner. So I would preferably want to see price. I want to see price down here before I want to look for longs. If price is going to be up here, then you're just going to have to be patient and wait for price to get down here so that we can go long. That would be what because dollar index is, and I can just jump over to that real quick. Dollar index is below that inversion. That's what I want to see. This is a beautiful sign that we are gonna trade down lower. Now we have another fair value gap here, coupled with an order block here, coupled with a wick. You can use the consequent encroachment, extend all those through. And let's just go ahead and take note of this, of that fair value gap. And I'm just gonna make that one a red. So we do want to see price continue down lower. We still have this 1 hour equal low below us. So with that premise in mind, I do still want to be bullish on the futures. I do want to be bullish. I want to see bullish prices here. I would love to see us trade into this and trade up higher. We do have a high fair value gap where you take the consequent encroachment of this wick, more or less in this area, more or less in that area. Let me just change these colors to avoid confusion. Let's go for red. So we are sitting inside of this I fair value gap. I fair value gap. And that's where you take the consequent encroachment of this wick, consequent encroachment of that wick, and you extend those out in time, and then you got a fair value gap. So this would be a 15-minute I fair value gap. Let's just take note of that. 15-minute. So this would be the base because I want to see dollar. I want to see dollar tanking from where it is. And I would want to see this then ideally follow through and go higher from where it's at. And we got this high here. We got that 15-minute high. So that would be a potential target. Change the colors here. We got a whole bunch of colors. Let's go for orange. Orange. Just look at a 5 and then go down to a 1 minute on NAS. We did take out this low. So this would be low, high, lower, low. So that's a breaker block. That high. That's a breaker block. Really close to the target though. Very, very close to that target. We also have this 5-minute order block. Good to take note of that. Colors, colors, colors. Let's just do a purple. Down to a 1 minute. Let's get to the 1 minute. Okay, this is really messy. This is not clean at all. Looks like we're stuck in a consolidation almost. This is just not clean. I just would not execute on anything in here. Nothing in here is clean to me yet. So that's where I like to come in, and then I like to start adding a filter. So I'm looking at this fair value gap. Let's see if it wants to get above this fair value gap, and perhaps we can then look for a setup to go long. But I don't like any of this price action in here. It's not clean, it's sideways, so it's not anything that I would execute anything off. So we are sitting on our hands. And it's 9. Look down there. Time, by the way, time is UTC, New York. So it's 9:07, no macro. We're inside of the 8:59:10 macro. Nothing here yet. Nothing clean for me. So just sit side on the sight lanes and wait patiently. If you are a inversion trader, then you could look for this. This is now would be inverted. You would then have to look. Well, that would probably be your entry point right there. And let's just check this. Look at this. If this was a setup that you were looking at for a stop, you have inversion. It's really messy in here. I don't like this. I do not like this. You got that inversion. I just don't like to use this as an order block because we have a volume in imbalance. So I don't like that. So I would be looking at this string of down candles as well as that one. So the stop we do have a fair value gap here. So that gives me context. So inversion, fair value gap, and then I would look at these order blocks. Stop's gonna have to go down there. Then we go for 1 to 2. Now that is quite a bit. But see that? Look at the price action. Look how much it takes for price just to get up there. That is like 6% or 12.2 ticks. Another confirmation that we are range bound because this is a really small range. But we're gonna trade through these equal highs. Then we just pull these back so we can see them on the screen. When our order block pull this back, pull back that fair value gap. It would be nice if we can get this trade back into this overlapping if we have a fair value gap here, fair value gap here. Let's see if it can trade into this and then go higher. But this is outside of a macro that I would look at taking any trades off. I would not look at take any trades off that. Let's just look at that fair value gap. I'll change the color to the ones that we're looking at to blue. So look at that one. Look at this one down there. See if price respects them and see how price reacts at those levels. Okay, see this consequent encroachment, beautiful. That's a respected level. Should keep on rallying higher. When you see something like this, if we can get above this high, then that's where I would start looking at bringing the stop in. And the reason why I would bring the stop in is because of the fact that we're sitting inside of this sideways consolidation. We don't really have any big volatility stepping into the market. So we have lackluster conditions. So we're likely going to be facing high resistance liquidity runs. So this is a lower probability condition. For me, the draw on liquidity is up here. Yesterday's high. That's the draw on liquidity. See, if we get above that high, if we get through this high, I would want to see price go through this rapidly. And then once we trade above that, then we have this down close candle, which would then be a order block. So that would be the order block. Gotta trade above it. Once we get above that, that is where I would look at bringing the stop. I would place the stop below this fair value gap because that still leaves me this fair value gap, the inversion as well as this, and it's right below that consequent encroachment. So that's a good little cushion. Not a good sign over here. Look at dollar index. Not looking good. Dollar is trading through these levels, going higher now. It's reaching up for its second or its higher inversion. Really impulsive candle here. So not looking very good. Not looking good because that's going to send us lower here on NAS. And that just adds to the whole scene if this is a consolidation price action. So that's what you expect. Price could come back and rally back into your. It's going to be give and take, give and take. Okay, look at that. Look at how it reacts around these levels. Let's move this thing over. We still have that wick consequent increment as well. Dollar index turned into its 1 hour order block. See that? Traded into that 1 hour order block. No signs of stopping yet. Still pushing up higher. So at this point in time, this is a perfect example of where I would start thinking about cutting the trade because we have invalidated this fair value gap, this fair value gap, that as well as this inversion. That's 3 levels that has now been mitigated. So this is where I would look at just collapsing the position in a small loss rather than holding on to it and waiting for it to come back down and hit you with a full loss. Now, if you have multiple contracts on, then it's a good idea to take something off now because rather than taking the full loss, this is where you preserve your capital and you take a portion of that position off, which in turn, your total loss will be a smaller loss than taking the full loss. That's how I would personally manage this if I was in a live trade. Let's keep watching it though. They traded into this high of this 15 fair value gap again here. And dollar traded into this 1 hour order block. Nice reaction off of that level. Still rallying up. So that is for your notes. And that is how I would look at managing this type of a situation with this type of market conditions, which are consolidation. That is how I would manage that because this thing is going to keep on. It's going to be up and down, up and down, up and down, up and down. So you got to be mindful and careful of that. Look at this down close candle. That is a order block. For the sake of the video, let's say we would still be holding this position. Where was the entry? Let me just see where that entry was. It was right there. So for the sake of the video, let's hold the position and let's see what happens. Stop was down there. Let's tape read the position. And see with tape reading, this is where you take your screenshots and you write down how do you feel as price is trading up and down like this. What are your emotions? How are you feeling? How do you feel as it's going down lower? See, that's not these are not things that I like to see in a clean, low resistance liquidity run. See how it's chasing down to your stop. Another thing, dollar index is, see that we traded into this fair value gap, moved away from that, not a good sign. We're likely going to continue down lower, taking these lows out. So we do have equal highs. We do have some equal lows here as well. We have another old low there. It's consolidation. We're stuck in this range. We're stuck inside that range now. 918, we're approaching the 920 macro. 930, 922. I look at 929 to 940. Look to see what it does. At this point, this would be a closure again. Once again, you would take something off here, collapse the whole position. It's traded below all these levels. For the sake of the stream again, let's keep watching it. And by the way, this is how you learn, folks. This is how you learn. Tape reading. It's the only way to really learn how you manage a position. Is you gotta physically look at the price action, see how it's trading at the levels, see how we disrespected that order block. I told you, look at that order block. Look at this fair value gap, which these are now inversions. See, that stop's gonna be hit. We're inside of this order block. Still inside the 15 fair value gap here, by the way. Still inside that 15 fair value gap. No respect of the consequent encroachment in there. It's not looking good. Ask yourself, if you were still in this position, how would you be feeling right now? Would you still be calm if it was this close to your stop? I know that I would definitely have taken something off, or I would have looked to collapse this whole position, because we have traded through 3 PD arrays now. So I would have been out of the position personally. Not looking good how we're trading into this fair value gap here and rejecting that lower. It's not looking good. The stop's going to be hit. So these are stuff that you write down in your journal when you're tape reading, specifically in conditions like these. And that's another thing, is when you're new and you're just starting out, you're going to ask, well, if I come into this market, how do I know what specific days I should not be trading and which days should I be looking at to take my trades in? That is through tape reading. Tape reading and looking at the calendar. Look at your calendar. Tuesday, we had 10 a.m. Okay. Nothing major. Wednesday, 10 a.m. Nothing major. Thursday, 8:30, core CPI. That's probably going to be pretty good. We're going to have some volatility coming in at 8:30, maybe something at 9:30. Friday, 8:30 core PPI, and as well as 10 a.m. prelim UAM consumer sentiment. So Thursday and Friday seem like more decent days. I would look to focus on those, where Monday, Tuesday, and Wednesday we do not have high impact news events, news drivers to push price around. That's why it's having we have this consolidation. And this, when I came into this, I and looked at this, I told you guys it's not clean. It's not clean. I don't like it. I like to see, again, going back to the previous stream, I told you guys I want to see that clean formation, that clean high trading into a higher time frame, and then I want to see from there. I would like to see a drop off, or we get a clean low trading into a higher time frame PD array, and we get a clean structure, and then take a trade higher from that. By clean structure, see if I can get an example of this. Let's see if I can find something. Not really, no. Not really able to find anything clean. Just to give us an example for you guys to understand what I'm really talking about here. Especially for those of you that are new to the stream today. Okay, here we go. If we look at this formation here, see that we have this formation. We have an order block, fair value gap, a nice impulse move down lower. Price trades up higher, trades into that, trades down lower. It's a nice clean structure. I like to get a clean structure behind price action. So your stop is not hit. We traded into the low of that 15-minute I fair value gap. Into this order block, that order block, that one. Rallying higher. So we're still in this, it's still sideways. We're not taking out the lows, and we're taking out that high now. So as soon as you take out that high and you still are in this position, I mean, at this point, I would just go break even on that trade. Take break even and put your stop in profits and cover your fees and commissions, because you sat through all this, and that eats into your mental capital. So put the stop at break even, cover your fees and commissions. And if you are in multiple contracts, then this is where you would take something off. Take something off, reduce that overall exposure, and pay yourself something for sitting through this. Even though you have the stop in a profit, pay yourself something because you sat through all this. So that eats into your mental capital. So you repay yourself for sitting through that. Pay the trader, number one. We're not moving by much here. Not moving much at all. If you look at this from where we entered this, it's about 5.7 ticks. It's not even, it's barely one handle. So not a lot. Not much at all. Just want to see if I can get if we can look at the, okay, so now I would be extending this and I would take note of this fair value gap. That fair value gap, extend this, which would now then be a inversion. So that would be an inversion. Extend the inversion. Extend your inversion here. See, right there, you would be taken out. You would be taken out of that break even, but you would still have paid yourself something for sitting through all this. Extend that through. Order block. Extend that thing through. You're still looking at it. You're still watching it. We have not yet analyzed the ES. I would just like to give a quick glance on that. Just like to look at that real quick. Just going to get it up here so we can glance over that quick. Because I haven't looked at those yet. See that? Consolidation, baby. We took out the buyers. It's likely going to go for these sellers next. $9.29. Let's just look at the 9:30 opening. It's going to go for these lows. These lows, maybe these ones if it wants to. Remember, we still have 10 a.m. Volatility stepping in. See that? Sideways consolidation. Back into the high of that 15-minute fair value gap. Consequent encroachment of that. Up higher. By the way, dollar, look at that. Look at how we are wicking right there. Look at that. See that? 9:30 opening. Stepping in. Really induced people to go long, and then it's going to run it short. Taking these lows, it's going to go for those equal lows there and there. So now they took out both sides. It's going to go for rush through this. And if it wants to go now lower, then we're going to look at this 1 hour fair value gap. It's going to look to trade into that level. See how it's not going any lower? It just took out buyers, took out the sellers back into the range. Really, really messy. You do not want to be inside of this. This is where people blow their accounts. Inside of moves like this. If it runs to rally higher, we cleared this high. It's going to go for this high next. If they want to run it up higher. Still inside the range. Okay. Taking this high. Staking. There you go. Look at that. Right back down. What a messy day. What a choppy day. So now it's taking out the buy side. Now it's going to take out these equal lows. It's got equal lows in play. It's going to take them right into that 1 hour fair value gap. There you go. Both sides were cleared. Everybody got knocked out there. Everybody got knocked out. Some people for sure lost their accounts in that. For sure. See, that dollar is just sitting here casually, not doing much at all. US 100. US 500. Not clean, not much to see here. Traded now lower as well. Still continuing now lower. It's now we're trading in sync with dollar. Low probability market conditions here. If it wants to go down lower, we're probably going to be targeting these lows. Take out these guys that were long here. It's just been rallying up higher since the 10th. Just rallied up higher today. Since this morning. So all these guys are in profits. A nice trap move is set. Everybody's trapped here. And it's probably just going to target this low to get everybody out. Remember, you have to think like a market maker. How would they trap the retail traders? Everybody's taken out here. The buys got taken, the shorts got taken. They were induced long. So everybody that was above here, they were taken out. Everybody that was below here, they got taken out. So the board is cleared on both sides. So now they're going to send it where they want to send it to. Equal lows down here, it's going to go down there. That's a potential target. Relative equal lows, most likely going to go down there, take out everybody that's been sitting in a profit with a stop below these lows. Take them out. Dollar index. Put it into this. I believe this was a. What do we have? Did we have a 15? What did I remember we had this as a gap. Here. 5 minute. We had it as a gap here, and I said if we want to see it stay below that. So now we treat it above that. So that is a concern. You got to be concerned by that because if we reject that and go higher, it's probably going to go above these highs. We're still stuck between this inversion and this one. If we want to go higher, then we would be looking at being stuck between them. If we do go lower, which we still have traded off of this 1 hour order block, then we just need to get through this 5 minute um 5 minute now inversion was a fair value gap. So there you go. Those lows are cleared. So at this point in time, if you sit down, or let's say I'm sitting down and price action is like this, and I look at the calendar, then I don't even have to sit down and look at this because I know it's going to be price action like this. And any move that does take place is not going to be something that's going to interest me at all. Even if they do throw a clean move, it's not going to be high probability conditions for me to want to be a part of these uh, of this market. Anyway, as this is trading out lower, let's just shift our focus to ES. Let's have a quick look at ES. Let's just switch the screen. Let me just get the screen over. Give me 1 second over here to get this going. Okay. Your screen should change on your side. Give it a second. Okay, we should be looking at the US 500 on a daily. So not much to see here again. I was looking at this daily fair value gap down there, and I was looking at some levels up here. We did take out yesterday's high on, just gonna note it as yesterday's high. Just quickly jump through this analysis so we can get to current price. So that is something I would have looked at, because I was looking at that same idea on ES. Relative equal lows below us. I would have looked at the wick most probably. Not going to take note of the wick right now. What is this? Get rid of this. Get rid of that. We had a 4-hour order block. I would still keep that on the charts. Those were cleared. 4-hour equal highs cleared. We still have 15 equal lows down there. Going to keep those. We also have 4-hour old lows here as well. Leonard, how do you know which fair value gap will hold? Again, that is something that comes down to experience with tape reading and looking at price and seeing this stuff over and over and over. And you look at how when price is trading through a fair value gap, and let's say you are expecting that to become an inversion to take a short, then you want to see price trade through that, and then you want to see price come back into that, and you look at how price trades when it wants to trade back into that level. Usually, if the level is going to be respected, then price is going to trade into the level, and you're going to see a instant reaction at that level. Price is going to trade into the consequent encroachment. It's going to trade into, if you're going to be short, then you're going to see price trading into maybe the low of the fair value gap, or you're going to see price trade into that lower quadrant of that fair value gap. And you're going to get that immediate reaction. It's going to be like snap of a finger, immediate reaction, and it's going to trade lower, and it's not going to come back to that level. You're going to see propulsion, explosive price action away from that level. Another confluence that I add to my idea is you come into your morning with some sort of a bias, and you frame that bias off of a higher time frame. Now, you want to try and be in line with the higher time frame order flow, because that gives you that it gives you this extra level of, how can I put it, support from institutional order flow. You are on side with price action. So generally, when you are on side with price action, you're using those higher time frame, the higher time frame draw on liquidity. Then that would usually be how you would know that those fair value gaps are more likely to hold. You got to use that higher time frame draw on liquidity, the higher time frame bias. And price action needs to be one-sided on your higher time frame. And then usually you're going to look for equal highs or equal lows coinciding with that higher time frame bias. And any fair value gap that forms in line with that idea, they should hold price. But again, you're gonna have to look at how price is trading around those levels and how price reacts once it trades into them. Do you see that immediate reaction? Price trades into it, snap, gets out of the level, and it starts rallying in your direction towards the equal highs. That's in line with what you want to see. And then another thing that I add on top of that is usually I look for that higher time frame PD array. I look for price to trade into that higher time frame PD array. And then I look for some entry model, which that could maybe in that case, maybe you would apply a fair value gap. And then you would look for something like a ICT, the classic ICT, the YouTube model. You would look for that fair value gap with that impulse. You want to see price trade through that fair value gap with an impulse, give you that fair value gap, come back into it, and then rally off higher. And it's really going to depend on, again, how price trades back into that fair value gap. Does it give you that instant reaction, or is price sitting around? Is it not showing signs of rejecting that level and wanting to continue higher to, let's say, for instance, equal highs? So it's really not just one simple thing that comes to mind to know how a fair value gap's gonna hold. There's a whole bunch of confluences that you're looking at and things that you want to see that give you higher probability for, let's say, a fair value gap to hold in the direction that you are expecting it to hold. That's why a lot of times when I'm looking at price and I have a 50-50 condition where I've got equal highs and equal lows and we're sitting inside of a range, I like to go on a 15-minute as an example. I like to take a higher time frame, but not a higher time frame as in a 4 hour, but something like a 15, 1 hour, or a 5 minute. And I like to get a fair value gap. Now, it could be a fair value gap, or it could be a inversion, or it could be a fair value gap that I would expect to turn into a inversion. And I would look at how price trades around that level. If we respect the level and we stay above the fair value gap, then if that is in line with, let's say, I originally wanted to be bullish for the day, then I would ideally want to see price clear one side of the board. And then I would look at how we trade at that fair value gap, or I would look for another fair value gap that's in close proximity to where price is trading at. And I would look at how price trades around that level. And then from that level on, if price respects, let's say, a fair value gap, then I would take that and then I would go long off of that level. If, for instance, let's say we took out the sell side, then I would look to take longs at that position. Let's just go over to the US 100 again, because this is a perfect example of what I'm talking about. Like, we took this 1 hour. I had this 1 hour fair value gap. I had it on the chart already. We were sitting in a 50-50 this morning, right? 50-50 consolidation on lower time frames. So what I love to do is I love to go and I like to get something like a fair value gap. Like, we could use this 15 fair value gap. We could use the fair value gap from the hourly chart. And then I look for price to trade one side or the other. So I would then look at this high, and I would look at this low here, or this low. And I would wait for price to trade the one side, which we did that. Then we had this fair value gap. Then I would want to see, do we trade into this and reject and go higher? Or do we go through this? Do we take the sell side out? How do we trade through that? We kept on trading through it. Nothing here stood in price's way. Just traded right through that fair value gap. Big candles down lower. Then we traded above it. So now it becomes an inversion. The moment that it traded through that, if it traded back into it here, you look at how it traded back into it. And look at how they traded into it here. They traded into it. See that? It was sitting at the low, 20, then 25%, more or less 25% there. If you take from the midpoint to the low, half of that, 25%, then it traded into the consequent encroachment, and they closed it down lower again. See that trap move? Again, and this is again where you just have to study price action. You got to keep on building your knowledge. You got to keep on tape reading. You keep on journaling. If they cleared the sell side, what are they going to do? They're going to go for the buy side. Going to take it higher. They took out everybody short. Now they're going to take all the stops above these highs again, because they're still in place. Equal highs above us. So that is a trap move. Trap move. Time of day outside of the macro. I only look at 920 to up to 940. So that would be outside of my scope. Even if it did continue trading out lower, then I'm not going to be a part of that trade. And there's not going to be any FOMO regarding me missing that position. That is part of my rules. If it's outside of my window, then I'm not going to be a part of it. And then trade it through this. How did it trade through the inversion? With propulsion, one candle. Nothing stood in its way. So if it trades above it, I then look at this and I want to see how, if price comes back into this, how does price trade back into it? Now, keep in mind, we didn't have another fair value gap. You would take note of that fair value gap. Take note of that. So you take note of that. You extend it through. Let's blow this up a little bit. You extend it through. It trades back into this. It taps it. And it immediately rejects. It does not even get back into the lower inversion. It only comes into the fair value gap. Taps and rejects. And it's off to the races. Goes above the high. Now, this is a beautiful rejection, but this is not an entry that I would take off of a fair value gap, just because personally I like to see price come trade down into this. I would have liked to see it come down, trade into the lower fair value gap as well. And that's just the me thing. That's just how I look at this and see, okay, that makes me feel more confident, or that makes me feel less confident. And now this makes me feel less confident, so I just would not take that entry. But this would be an institutional um order flow entry drill where price comes into that fair value gap, trades it by one tick, take the entry, and it rallies right out of there immediately. Immediate reaction gives you the immediate reaction, and it doesn't come back to that level. The only other entry you could have taken from this consequent encroachment of that wick, and that's something that I also just don't feel comfortable to do. But maybe that's your niche. Maybe that's exactly what you're looking for. Maybe that could be your model. So that's where every trader is going to be different. So that's where you're going to have to go in. You're going to have to do tape reading, back testing, forward testing. You're going to do tape reading, and then you're going to go into a demo. That's where you're going to do your studies, and you're going to see what BD array do I easily see in price, and which ones do I resonate the most with. And you're going to continue studying that specific one, because that's going to be the one that you're going to take, and eventually you're going to make a model with that specific one. And then you're going to keep on journaling, keep on tape reading it. And then you're going to take that model, you're going to go into a demo, and you're going to keep on studying, keep on journaling it. You're going to take that demo, throw it into a drawdown. Throw that demo into a 2K drawdown. And this is what ICT did. He did this. This was part of the mentorship. I think it was at the 2023 mentorship. You throw the account into the demo into a $2,000 drawdown from what we started out with 50K account size on the TradingView platform. You open it up, you go adjust the demo to 50K, and we threw it into I believe a 2 or 3K. I think it was a 2K drawdown that we did. And if you can trade that demo and you can recoup that 2K drawdown, and you can make a profit on top of that with that specific model that you are studying, then you should be ready to go into a live environment. Again, that is something that you're going to have to have to do on your own. That is not something that I can advise you or tell you when you're going to be able to do that. You're going to have to look at your journal, and you're going to have to decide based upon your own results how you feel and what makes you feel comfortable and what makes you not feel comfortable yet to take that step. But anyway, you would have this consequent encroachment entry, and it would trade back into it one more time. After that, it's off to the races. Let's just throw the position on this, and let's say you were looking at, let's consequent encroachment entry. If I look at this consequent encroachment entry, I would have the consequent encroachment of the wick, fair value gap. This would classify as an order block. And I would also have the fair value gap here, the 1 hour inversion. So 3 PD arrays. Stop would be below that. So that is a 9 tick or 2 handle stop loss. Take profit would be above that high. Above that high, that would be where you should look at taking something off. And that is a 1 to 1.8% return. Okay, that could be your model right there. That could be the exact thing that you go in and you hunt that exact setup. Might be your model. Then that is what you do. Maybe somebody else is going to be looking for this institutional order flow entry drill, and that's exactly what they want to see. It taps 1 tick below the low of this candle into the fair value gap. It's off to the races. Again, the stop's going to be you have fair value gap, order block, and I have a higher time frame inversion. Stop's going to be below the order block entry. Take profit above the high. That's going to be a 1 to 2. So you're going to have to go in and you're going to have to submit to doing the work, doing the studying, doing the journaling, doing all the tedious things. And then you will figure out what model presents with you and which one you find the easiest to identify, which one resonates the most with you. And that's going to be the one that you start out with. You start out with one, you start studying one, you take it through the stages of back testing, forward testing, taking it into a tape reading environment, taking it to a demo environment, taking it then eventually into a live environment. And you become profitable with one specific PD array. Take one model and become profitable with that one. And as you grow as a trader, when you feel comfortable, then you could start focusing on the second PD array that you spot easily. And then you would take it through that whole process of back testing it, forward testing it, make a model with it, or tweak the model that you use so that it fits with that specific PD array. And you then take it into tape reading, take it into a demo, you look at the results, and then you could take it into a live account. That's how it is. It's tedious, it's a lot of work, but that is the reality of what it is. Anyway, I do still want to glance over the US. Let's quickly glance over this. We still have not finished it. I still want to look at this just now. We still have that equal low, another low, fair value gap here. Could pull that through. I'm not going to pull it through. Looking at a 1 hour, see this still have relative equal lows. We have yesterday's high above us. I would most likely have looked at this fair value gap. Just going to quickly go over this, by the way. I'm not going to look at this too much. So that would be what I would be looking at. Fit it into that really, really beautifully. Look at a 5. Look at a 1. This was messy price action. I wouldn't, if I open it up and it looks like that, then I wouldn't be bothered to take a trade off of this. Really, really high resistance here as well to get through yesterday's high, to rally through, and not a lot of movement. As you can see, we have about 2 ticks there, just about 3 ticks. So it's really not a lot of movement, not clean. You didn't miss anything in here. Just glance over US 30, go up to a daily. This has been messy like for quite a while, since the 24th. Yeah, the 24th of June. This has been sitting in a sideways, messy chop consolidation, cleared the high. Monday, still sitting inside of a weekly fair value gap. Let's just glance over at this. Sitting inside that, looking at that, that is a weekly order block. Took note of that. It's sitting inside of that. We have a monthly old high and a weekly old high there, which I noted. See that? Down into a daily. Really, really messy price action. We had this wick as well on Monday. Daily fair value gap below us. Really, really messy price action. Not a lot to go off of in this pair, actually. Really messy. On a 4-hour chart, yesterday we didn't have anything much besides, well, this low, which traded that low, which traded into the weekly fair value gap. We did that 10 a.m. Also traded up into this 1-hour BPR. Not much to see on a 4-hour, honestly. Not much to see unless you start looking back here. Didn't even note that because we're inside that weekly. Looking at a hourly chart, I noted this fair value gap, which now it's an inversion. For our 4-hour fair value gap. I don't think it was a 4-hour fair value gap. Oh, it was a 4-hour fair value gap. Okay, it was a 4-hour fair value gap. Anyway, it could have been a 1-hour fair value gap. Would be inverted. Probably would have extended that through since we also had this balanced price range. Good level to extend through. Look at that level. See how price trades around that level. 1-hour balanced price range. Ended up trading into that. Ended up just knocking it back down into this BPR down here. So it's sitting between these two higher time frame levels. So essentially really messy, not clean at all. Nothing to see. Not much to see and go off of in this one. Let's switch it back to the US 100. So there we go. High cleared. We ended off going higher. Took out some lows. It's a sideways market. High resistance liquidity runs. And these are conditions you want to avoid. Let's look at dollar quick. We haven't glanced at dollar again. Still hanging around sideways. Haven't missed much at all. Still inside its 5-minute fair value gap. So that's how you know. Look at your calendar. This is why you tape read. You gotta sit, you gotta tape read. You gotta study. And then you will start learning when you can avoid certain days. And really important, you learn how to look at certain PD arrays and then how price trades around those levels. And that it comes back to the question that was asked: How do you know which fair value gap is gonna be respected? You're gonna be tape reading, tape reading, tape reading, tape reading, looking at price, seeing how price reacts over and over and over and over again. And price has a certain way that it reacts when it respects a PD array, and it has a certain way that it reacts when it does not respect a PD array. Just trade right through it like it was nothing. And other times it trades right into it and it's like it just hit a brick wall and it's not going to be able to go through that, pulls back, immediately respect it, and it rallies off higher. So that is tape reading. To have it really answered, you need to tape read. It's more than one thing coming together to give you that perspective of what you want to see and what you just don't want to see. It takes time. It takes a lot of journaling, studying, sitting through sessions like this, where we look at price action like this in high resistance liquidity runs. So you know how to identify this and how to avoid this. And then ultimately, once you got that down, start you start understanding and puzzling. In the beginning, it feels like all these things are it becomes a lot of things to take in, and you're not quite sure where to place everything and what to do with all of the knowledge. But eventually you start piecing it, and all of it starts fitting like puzzle pieces. It just starts fitting into one another, and then you start getting this understanding of how you approach the market and how you apply everything that you've learned. You just got to keep on going. You just got to keep on going, keep on studying, keep on journaling. If you don't have a journal, then it's highly advisable to get yourself get yourself a journal. If you like to write down in a book, then get yourself a book, buy yourself pens, and start writing things down, noting things. If you like to journal digitally, then go get yourself Notion and start screenshotting and making notes, and put your annotations on the notes and start start journaling. That's where it starts. You start journaling, doing the stuff that nobody likes to do, and that's how you start learning. I think what I'll do is I think it'd be a good idea if I do a video on how to open up a Notion, and just how to go in Notion and how to set up a basic template that you can use to journal effectively with your back testing and your forward testing. And what I'm gonna do is I'm gonna take let me just see here. What was it? I'm gonna take I'm gonna take the 2022 mentorship model, because the fair value gap is easy to see, and I'm gonna go in and do the basic template with some of those videos. And I used to do that checklist, that stupid easy checklist for a basic that is a basic model for anybody looking to go in, and that's a real basic model. And you can take that thing, it's stripped down to bare minimum. You can take it, you can add on top of it, and you can start making that a complex model. You can start adding more confluences to that thing. So that's a real basic, real simple model that I threw out there, and it just blew right over the half of your heads. But it's simple, it's basic, it's stripped down to bare minimum. You take that, you start with that. You can take the fair value gap, you can replace the fair value gap with an order block. You can replace the fair value gap with a breaker block. You can replace the fair value gap with an inversion. You can replace the fair value gap with a consequent encroachment. You can take any one of ICT's PD arrays and you can throw it in there, replace fair value gap, and it becomes a basic foundation to build a model on whichever PD array that resonates with you. That is how you start out. Take a simple model, build on top of that model, and then as you advance, then you start adding to it. You start adding more confluences. You start adding your own tweaks to that model. That's how you do it. But you start simple. You make it easy. I'll do that, and we'll go over how to take those simple things and how to start journaling it. Do a decent video on a Notion journal and how to get that set up properly. Because that you need to journal. You should be journaling. If you're not journaling, you're wasting your time. You're not going to get anywhere if you're not journaling. So that's you need to start doing that. I'll see I'll see when I can drop the video on that, but it should be released by the weekend. Latest by maybe Saturday morning, I think. It should be, so you guys should check that out because that's going to be a really really nice addition to what's been covered so far in on these live streams, especially in today's live stream as well, and as well as the videos that are on the channel covering that 2022 playlist. And let's just close it off by looking at the calendar again for next week. Okay, for next week we have Monday, we have 8:30 Empire State Manufacturing Index. We have a lunch Fitcher Powell. This is on Monday, by the way, Monday. Tuesday we have core retail sales 8:30. Wednesday 8:30 building permits, 9:15 imperial production. Nothing high impact on Wednesday. Thursday unemployment claims 8:30. Hmm. I'll think over it and then I will let you guys know when we're gonna do the stream exactly. But we're probably gonna look at Wednesday and we'll look to start the stream at 8 a.m. and we'll pull it through to 9:40 or 9:50. But I will let you guys know on the social medias and I will post the link to the stream. I'll post it as a scheduled stream again so that you guys are all well informed ahead of time of when we're gonna do it. But that's gonna conclude this one. Hopefully you have written down something in your journal. You should have. If you didn't, then it blew right over your head and you've learned nothing. And until we talk again, be safe.